Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by the main man, Fungai Tarirah, portfolio manager at Rudiarius Capital Management, to answer that very tricky question: is Africa still rising? So we've got you on board to speak about an easy topic today, Fungai. Thanks for joining us.
Thank you very much for having me again. It's not the easiest one to sort of have a discussion about, but I think there is still plenty there that suggests the African story is still moving in the right direction. Maybe just for guidance, if we go back to where the term actually came from, there's a book that was written which had that in the title.
Right.
And the rest of the title is, "And Why 900 Million People Across the African Continent Matter."
Right.
And I think they still matter in quite a number of aspects, at least economically, and to the extent that investors can still benefit from developments that are taking place across the continent. One of the biggest things I think that's taking place that demonstrates that Africa is still rising is you're still getting the strengthening of institutions and oversight across the continent. Corruption still exists. The difficult things are still in place, but they are easing and they're actually moving in the right direction.
Let's ask the difficult questions to start with. Is the Africa story really a commodity story?
So I think when you look at the continent, it's probably a good thing to understand each country for how it relates to commodities, right? And generally speaking, you've got commodity exporters and commodity importers.
Right.
And having said
we forget that actually.
Well, exactly, right?
Yeah.
And having said that, you've got hard commodities and soft commodities, right? So those are, I think, different planes on which you can look at the story. So for hard commodity exporters, it has been a difficult, call it 2 years. The oil price is down, precious metal prices are down. So countries like Zambia, Algeria, Nigeria, Angola, going through difficult times because their main source of export revenue and their main sources of government revenue have not come through as strong as they normally do.
Right.
And obviously low hard commodity prices make that a difficult situation for them.
In a perverse way, could this, I guess, patch of negative price movements turn out to be positive in the long term because those economies are having to refocus in terms of where they generate revenue?
Absolutely. So if you listen to the conversations a lot of the in-country business people and policymakers are having, they are now refocused on the idea of they need to diversify their economies away from these commodities that generally run or drive the economy.
Naturally, it would have been great if they had this conversation 5 years ago.
No, of course, but it's always difficult while the times are good, right? But I think some difficulty always helps to focus the mind, and they still have a lot of other things going for them, right? I mean, we look at Nigeria, for example, in as much as oil makes up the bulk of the revenues and the government inflows as well, from an economic point of view, oil had actually subsided to less than 30% of GDP.
Right.
And over the last 6 to 7 years, non-oil GDP has been driving growth despite the high prices we've seen in oil. So already some of that development is coming through, but obviously the current situation says the pace needs to pick up.
And it's an important point that you make in that it hasn't been a factor that, or it wasn't a factor that the oil price was actually low. It was that the other sectors were doing quite well.
Yes.
Okay. Now, naturally, we started off, you touched on Nigeria. Everybody thinks Africa, Nigeria, South Africa, and hey, maybe throw in Egypt, and that's all there is to it, right? Let's start with Nigeria in particular. What are the prospects? It seems as if the long-term prospects are probably a little bit better than short-term.
Sums it up pretty well. I think some structural things that are going in place are definitely in the right direction. They're cutting down the opportunities for graft in the system. They're streamlining government activities, and they're making sure that state-owned enterprises can turn commercial and hopefully down the line profitable. All of these are positive structural changes. They're also making money available for sectors or financing available for sectors that can actually start to drive non-oil GDP. So there's a facility, for example, that's being advanced through the different banks that allows people involved in farming to access subsidized funding for their activities. Right? So down the line, this should help with cutting the import bill because at least more and more food should be produced locally. So these sorts of initiatives make you feel good about the long-term prospects of the country. In the short term, however, yes, there are some fairly significant headwinds. The lack of foreign currency makes it a very difficult operating environment for a lot of the businesses, notably the ones that have to import some of their raw materials. Some of them are resorting to the parallel market, so that increases the cost because the rate is very different from what you find on the official market. But I think over time some of these things can actually be ironed out if we can get the right sort of policies in place, and then the differences start to come through on the positive things that have been done on the long-term side.
Now, if we shift our attention, you spoke about the commodity producers, the commodity consumers. How are they doing as an aggregate?
So you get countries like Morocco, countries like Kenya, for example, who are net importers of commodities, and typically fuel, whether it's diesel or petroleum or gas, makes up a large part of that import component.
Right.
If the average oil price is down more than 50%, it directly translates that their largest import commodity, the price of that is actually down more than 50%.
Right.
And that's coming through in the inflation numbers that those kinds of countries are experiencing. So much so that it's passing on and people have got savings, right? So at a time when global growth looks kind of difficult, you're actually getting robust developments taking place in places like Morocco and Kenya. In Kenya, the fuel prices are down more than 20% and continue to remain really low. In Morocco, they've cut subsidies that they used to have on fuel, which is helping to repair government finances. The budget deficit is starting to shrink as a result of that. And they're taking advantage of this time where you've actually got soft, hard commodity prices.
I'm getting really excited. I'm hearing positive things here.
It's about time.
Again, I think it's important that we touch on these points because Financial Mail, as an example, had a headline that suggested that the continent isn't doing as well as it should be or as we've expected. So it sounds like you're quite bullish in terms of the prospects of pockets of the continent. You can't you can't put it in one basket.
There's that, and I also think the fact that development or progress takes place over time, right? So by nature, I think as humans, we're looking for next point estimate must be up and everything must be positive. Right. But in some cases, yes, it's many steps forward and then a few steps back, and then we're back on the development path. And I see a lot of that kind of development in many of the different countries that we look at.
Right. So as investors or market speculators, I guess then it is important that we shift our focus not to the short-term numbers, but the long-term prospects.
I'll speak about investors because that's definitely the camp that we sort of fall into. Sure. But ultimately what you're trying to buy is the long-term earnings potential of the individual businesses. Right. And for us to assess that, or for us to have confidence in that, it's because we're seeing that the operating environment in which these businesses conduct their activities are actually supportive of the activities they have in place. Right. More and more countries have got supporting price environments. Companies are free to price their products on whatever basis they actually need. Right. Increased financial penetration means that they can access more and more of the consumers who sometimes previously could not get those products. A simple one is, how mobile money has changed people's access to financial services. Right? So much so that you're now getting some countries or banks in some countries that are now willing to lend on the back of the cash history that people are showing on their mobile money accounts. Right? So that's a significant development from the days when you had to walk into a bricks and mortar branch, you had to open up an account, savings or current, and you had to have 2 years or 3 years worth of history of that kind of banking, which is at a very different price point, before you could actually access a loan or a mortgage or insurance or whatever product.
So a great example of how the continent's benefiting from technology improvements.
100%. And Kenya is obviously the poster child, but this development is taking place in many countries across the continent. Ecocash has taken Zimbabwe by storm. You can see a lot of businesses have moved to a completely different level because they can access that kind of mobile money functionality. And the same is taking place in Nigeria, where, of course, from a population point of view, you're managing to touch quite a number of people as far as the continent is concerned.
I guess the other factor that, as you touched on, the book spoke about is the demographics of the continent haven't changed just because there's an economic dip.
Correct.
So that certainly bodes well for certain sectors going forward.
all those people will still need to eat, will still need education, will still need access to clean water, will still need accommodation. And if they can't find jobs, I think the entrepreneurial spirit is still alive and well in many of the places, at least, that we visit. And you can see that people are saying, okay, maybe the system can't afford me a job at this point in time, but I can get myself a three-wheeler and I can offer transport services. Or I can get individual cigarettes and stand at a corner and sell that to actually generate the income that I need. That entrepreneurial spirit exists, I think, at every level along the economic chain, and that does contribute to how these countries are growing.
Right, and the next point is, are we still seeing pockets of really fast growth coming from countries on the continent?
So quite a number of countries are starting to commit relatively large amounts of their, or large portions of their government budgets towards infrastructure development. So you'll find that in the areas where that is taking place, you're getting an disproportionately fast growth coming through in those particular areas. In Egypt, for example, the road development that they're putting through, the middle class is still furiously buying homes as in when they wed or they need a place to stay. They still consider property an inflation hedge. So you find people are buying second and third homes to try and protect themselves from inflation and from currency devaluation. So you'll find that the growth coming through in some of those kinds of sectors is actually faster than you'd see elsewhere in the economy. And I think that's certainly exciting, at least from an investment point of view.
Sure. See, I love ending conversations on that positive note. Let's leave it there, Fungai. Thanks to my guest, the very positive Fungai Tarirah, Portfolio Manager at Rudiarius Capital Management. That's all from Buy Africa this week. Remember to follow me on Twitter, that's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.